Today's podcast is brought to you in part by Powerful Creators Mentoring. Are you ready to manifest rapid growth in your business or sales career? Head on over to powerfulcreators.net/mentoring. Enter promo code MENTOR96, all caps, and get 96% off your first mentoring session. Today's show is also brought to you in part by Naked Warrior Recovery. I have been on a personal health journey to improve myself, and after stumbling across Naked Warrior's Happy Berry energy drink with all the good vitamins and electrolytes that give you great balance and mental clarity without the junks and jitters that other brands give you, I personally can't get enough of Naked Warrior energy drink powder. It tastes like happy berries too. Click the link in the bio, type in promo code JBolton at checkout for 20% off.
Welcome to the Josh Bolton Show, where we dive into interesting and inspiring conversations. And now, your host, Josh Bolton.
Hey Josh, how you doing?
Doing yourself.
Thank you.
So, I want to say, how many interviews do you have going on so far?
This is my third out of fifth for today. So I have 5 total. This is the third one.
So I literally only got you an hour, huh?
Yeah.
All right, cool. I just want to check with you. The way your receptionist is talking to me, I'm like, oh, this sounds like a busy man.
Oh, thank you. Yeah, I was just listening to your episode right now, your podcast with the German startup guy. That's the right show, right?
Yes.
Okay, perfect. Yeah, I like your show. I like the episode. I was about to be late to this podcast because I was listening to this episode.
That's awesome. That's an excellent compliment. Thank you. It's just me and him. We're just having fun. So what is it you do specifically? Real estate, right?
So I'm a financial planner and I help clients in all throughout the country pretty much solve financial problems. I help a lot of real estate investors. It's kind of one of the niches we have. And I like to just kind of just go in as a general money problem solver, working with clients throughout the country. And I also have a podcast called Thinking Like a Bank. And the show is just like how it sounds, Thinking Like a Bank, how to like spread more awareness about what a bank would do. Mm-hmm.
Cool. And I'll have to look yours up after this. I want to say I'm loving this energy already. Can we just get a quick intro of who you are and then pick up? I actually want to talk to you about the money part next.
Okay, perfect. Okay. Is the show live right now? Are we going live?
I don't do live.
Oh, okay,
It is recording though.
Okay, perfect. Okay, yeah. So just kind of some background about me. So I'm from Chicago, Illinois. I run a company called Financial Asset Protection. So financial services firm. We can operate in all 50 states. I have the podcast Thinking Like a Bank, and I just wrote a book. It's more of an ebook. It's called Thinking Like a Bank. I give it away to listeners for free. And I live actually in the suburbs of Chicago, married. My wife and I have a son. And that's pretty much, my background took kind of a curve. I wanted to be a criminal defense attorney. So I got a bachelor's degree in criminal justice, and then I was going to go to law school. But kind of at like the last minute, I changed my mind. I got my MBA instead, and then went down the path of financial services and insurance. So it's kind of like wrapped together. Today, I'm a financial planner / insurance agent and we kind of do holistic planning for clients that might involve real estate, might involve insurance, might involve debt management. So kind of we take an unbiased approach and see how we can help clients.
Awesome. That's sad to say. A lot of financial people, they're very biased. It's like, oh, if you don't have this, we can't work with you.
You're so right. Yeah, exactly. So like one problem in financial services right now is a lot of planners are like captive to one concept or one company. So like they can only do like, for example, mutual funds for this company. And if you're not going to do that, they just skip you and go to the next person. They can't provide any more advice because there's licensing restrictions. And this is kind of a problem. But we're completely independent. We're not tied to any companies or concepts. So we can really talk about anything with clients.
Can I get your name? Because I don't want to butcher it.
Oh, yeah. Sarry Ibrahim.
Okay. He said it. So hopefully I get it. So I'm curious about you because I actually had Stefan Carano from UBS Money Monday on the show. And that was one of them. He even said, he's like, it's sad to say when it comes to financials, he's like, we offer a free, no strings attached consultations, maybe give you a quick lowdown how to get rid of your debt kind of thing. But he's like, we're kind of tied more to the accredited investors, like the dentists, the doctors that they make a lot of money, but they don't have time to learn the market kind of thing, but they want to retire. So he's like, that's our niche. But he's like, we do try to help those who are at least close to accredited investors that we can. But he's like, with all the rules, accredited investor is pretty much the only one we can take up.
Yeah, exactly. So yeah, an accredited investor is somebody who like has more than usually $1 million in net worth, or makes more than $200,000 a year, or is joint married, makes $300,000 a year for the last 2 years. So yeah, it's a smaller group of the U.S. Not the majority are not accredited investors, and that kind of leaves a lot of people without financial support. And that's too something like a lot of the mentality of financial planning is like, if you don't have enough money, work on yourself, pay down debt, make some more money, and then I can help you out. When in reality, it's kind of counterintuitive. It's like, I'm coming to you so that way I could get there faster. So I can, kind of identify how to, position some things to grow faster.
Yeah. And that was the biggest one. He's like, mainly because our hands are tied with rules, we just chose the accredited investor route. I'm like, so you mentioned something within the real estate aspect.
Yes.
Do you advise on like stocks, but also REITs on top of investing in properties?
So yes, so not necessarily REITs, but more so of syndication. So the difference is like,
interesting. Okay.
Yeah, the difference is a REIT is more of like a stock portfolio type. Like a lot of the apps out there for real estate investing, those are typically REITs. It would be like millions of users. They would invest, $10,000 or $20,000 in it, and they'd collect, hundreds of millions of dollars, and they go buy properties and invest in properties. That's more of a REIT. And then a syndication is like, for example, there's a self-storage place or a mobile park home. Those are really popular for syndications. And then a group of investors will get together. There'll be like a general partner / sponsor, like the general manager of the deal. And then he or she will have limited partners, people investing in the deal. And it could vary. Usually it's a minimum of like $50,000 per person. And however they structure the fund to take on as many people, then they would all go together and then buy that property or that self-storage place. And then every month they would like collect rental income, and then they would distribute that to the limited partners minus like their expenses and things like that. So it's kind of a syndication. I think from a financial planning perspective, it's really hard to say like this is better than that, like because it's very difficult to do that in financial planning. But I think overall, I like syndications a lot more. You get you get some of the depreciation. It's almost like it's almost as if you actually own the real estate. You're a part owner of the real estate property or the fund. Whereas in a REIT, it's almost like you're investing in the stock market.
Yeah. Yeah. For me, I got involved with Fundrise, if you know that one.
Yes.
Yeah. And I was just the small like $3,000 account. So I got my 1099, but I didn't get my K1 because they said essentially if you have 10K or more, then you are a full-on partner with us. And I was like, okay, cool. I didn't want to deal with a K1 this year kind of thing.
Yeah. Fundrise is, I think, it's the biggest publicly open REIT.
Yeah, it's like a REIT company, but they're also like a lot of what they put me in was like development. So they were buying land. They just needed a cash kind of thing.
Yes.
But it was fun. But then that's where I thought, because I didn't read their contract, which was like 200 pages. Not many have time to read that. Mm-hmm. But I was like, oh shoot, I'm gonna get a K1. That's where I pulled my money. It triggered a short-term capital gain event, but I only made like $100. So I'm like, what, 40? Like I have to give the government $40 kind of thing.
Yeah, that's a problem. So yeah, typically it's more long-term, like 5-year hold. And that's kind of the only downside, I think, is I've read a lot of stuff I've researched a lot of Fundrise, and I've heard constantly that's one of the biggest not just Fundrise per se, but other companies like that, is that it's typically a 5-year hold time, and you really don't make money unless you hold that time.
Yeah.
Same with syndication. Syndication is the first thing they tell you when you go be a part of a syndication is this is illiquid money. Like you're putting in, for example, $50,000, you'll get back probably monthly or quarterly returns. But at the same time, it's not like you can have all that money back right away, unless there's some situation where they refinance in the middle, they give you your money back and you're out of the deal.
Yeah. Then they cut you from everything, and then good luck trying to get back in.
Yeah. Yep. Exactly.
So then what is the biggest problem you see with all the people you help with money management? Like the biggest trend you see, is it that people don't understand the cash flow, or they're just crazy in debt?
Yeah. So the biggest thing, it's hard. There's a lot of problems, but one problem, like the biggest one I see, is that people don't know what they want exactly. Like, okay. So sometimes clients will call me and say, hey, I heard there's this fund where if you put, whatever X amount of dollars over the next 10 years, your money will double. And then like, it's like, that might be true, right? That could be true. The qualities of that fund or that investment could be true, but what is it that you want to accomplish? And then when I ask that question, they're like, well, I want to double my money in 10 years. And is it like, really, is that what you literally want to do? Or is it that the product is very appealing or the object is very appealing? So I think that's one problem, is that it's like you're following the product or the shininess of the product, but not necessarily the back end functions of what that could do for your life. So I think if you focus more on that, you'll actually understand more of how to invest, how to pay down debt, what you should do. And then the second problem is that people put themselves into like conventional lanes where it's like, all right, you should own a house by the time you're 35. You should own a business by the time you're 40. You should have passive income coming in by age 50. So like those aren't true. Those are not hard rules. Those are just what is, right, normally a lot of people might say is true or normal. So I think that's another problem, is that you don't want to put yourself in these conventional lanes. Think kind of like freely, like what is it that you want to do? What do you want to accomplish? Why are these things important to you? There's no right or wrong answer, but why is it important to you? And identifying those whys and like really getting down into them, and understanding like your purpose of why you want to do everything.
Oh, 100%. That is the biggest one. Like for me, as I've talked to different people, and I'm good with numbers too, trying to solve the problem without ruining them. Yeah. And that's the biggest one, is like they get all these shiny objects, rack up stupid amount of debt. And I just told them, like, but was it really worth it? Because like there's sometimes debt's really worth it. Like if you go buy a house, if you rent it out, you can make the payment on for your loan, it may be an extra $300 a month. But I'm like, buying a random doodad off the internet, is that going to make you money in 5 years?
Exactly. Yeah. There's a distinction between, like you mentioned, good debt versus bad debt. That is a distinction. I think, like, to clarify, like, good debt helps you make more money. Like if I go out and I buy investment property with like 4% interest now, or 4.5% interest, it's gone up a little bit.
It's gone up a little, but not a lot.
Yeah. And then you borrow, and then you earn, let's just say 8%, then your split is 4% profit. You bought money at 4%, you sold it in theory at 8%, and then that's your split. It's like buying something for, $1 and selling it for $2. That's kind of the mentality of good debt. This is what banks do, right? They buy money at a very low cost from point A, and they sell it at a much higher cost to point B, and then even point C, and it keeps going on in different products, different banking products. But yeah, and then bad debt, you can't, there's no value to it. Like, for example, if I have a credit card with like 16% APR interest, I can't like sell it to somebody else for like 18%. Nobody's going to buy, 18%. Right. It's not a good business move. There's no strong collateral behind it. It's not a good business decision. But sometimes credit cards, you have to, there's some advantage, right? Like paying off, getting points, then paying them off. But in theory, like there's a distinction between good debt and bad debt. And this is where like no financial situation is going to be the same. So like you might have one investor who like, they do certain things certain ways. Like they buy properties at certain ways, they borrow against them in certain ways, they pay them back, they invest some in the stock market. Like they have their own formulas, and that's really important too. It's very difficult to tell somebody, here's the blueprint for financial success. That doesn't exist. What does exist are core principles that you could match, that you could duplicate amongst people, just basic things and basic principles, but not the overall strategy. No way, it's impossible.
Oh, 100%. That's what I explain people. Is the analogy, like there's a million ways to the top of the mountain, but there's one that's guaranteed. But the rest, they all make it to the top.
Yes.
So yeah, that's a big one for me. Essentially, it's just like one person was asking me, because I'm learning trading and stock markets and all that. And they're like, oh, so you're going to be like a billionaire by 35? I'm like, no, I'll have a good chunk of change, but I'm not. The stock market does not grow that fast. I wish it did, but it doesn't. And that's where they kind of like sit there and look at me. I'm like, this is a really, really slow burn. Yes. And it's one of those, I'm like, I might not fully be out of the rat race until like 38, because then finally everything is at that point. It makes more sense to just let it do its thing, and I go travel kind of thing.
Yeah. The book, The Psychology of Money. Have you read it?
No, but I'm going to have to look it up now.
Yeah. The Psychology of Money. It's a really good book. The author starts off talking about Warren Buffett and how, I don't know, I think he's worth like 85 billion now. And he made like 83 of the 85 billion after the age of 65. So like, that's kind of because people don't really know that. They just think that he's a billionaire. He's always been a billionaire. You know what I mean? So, or that much money. So kind of like it gives you the idea of like how the stock market works as a long-term game. And then vice versa. Like if you are looking for like quick, I think that if you're looking for quick returns anywhere, I don't think that's a good place to go the stock market or anywhere passively. I think if you really wanted like super fast money, the best way for super fast money is active involvement in a business. Like you start a business, some sort of niche or industry that does have fast cash flow or faster cash flow. I think that would be, there's still risk involved, there's time and everything like that. But I think like if you really wanted that, that's probably your best option, is to do something, some sort of work related industry, actively investing. Because really there's two ways to invest your money, right? Actively or passively. Actively is like you start a business, that's an active investment. You're actively involved in it. And then passive is like you go to Robinhood and buy stocks, or you go to a REIT, or you go to a syndication. You're not doing anything but moving money from point A to point B. So kind of like just kind of identify those two things.
Oh, 100%. That's the biggest one for me as I've been studying and learning, is like like I said, the passive will eventually kick in to the point where then I'm like, it's no worries. I have guaranteed like $2,000 a month in dividends. So I can work if I want to, but also if I want to take off the month, I can too. But that's I pretty much tell people, I'm like analogy of like a 5-gallon bucket under a sink. I'm like, the first few drops, you're not going to even notice it. But if you walk away for a couple hours, or that would be a couple years in this analogy, and you come back, suddenly things overflow and you're like, holy shit, what happened, kind of thing.
Exactly. Yeah. The book, The Psychology of Money, talks about that too. It talks about how the smallest things eventually could be a problem. Like this leaking sink, even the drops, when it overflows, could be an actual problem that you need to solve. You need to stop that leakage because it's creating this problem. And then vice versa with success, right? It's like it takes so long to build something up. I see this a lot with business, right? Like for example, you're starting a professional service firm, right? Like a real estate agent or a mortgage lender or an accountant or a lawyer, something. Just for example, I work with a lot of those professionals. So I kind of see how their operations are. And you start this firm, right? And then you're looking everywhere for clients. You're calling people, you're calling businesses, you're going to business meetings, and then you're trying to build up your book of business, your referrals, and then all of a sudden, you can't even take on more people. Like it's getting to the point where like you have to like just turn people away or refer them to somebody else or hire people. So yeah, I like that analogy you mentioned a lot.
Yeah, and it's very true. And this is one of those, because like a lot of them are more gambler mindset. They're like, oh, we just throw everything on 000 on a roulette. I don't think even that exists actually, but we'll just say if for some reason 000 exists, and like, and we'll just make our money. I'm like, but the odds of that actually working out is insane. You're better off winning on a scratcher than you are with that.
Exactly. Yeah. Exactly. And then the second question would be is, let's just say that does happen. Like, are you going to take your money all out? You know what I mean? And then a lot of people here's the problem. A lot of people would get addicted to that. Like if they put $1,000 and 1,000 turned into 20,000, I think the majority of people will not sell and take their money out. They'll say, all right, that's 20,000 could potentially become 400,000. And this is how people end up like falling for these traps, these casino-like traps. And then having this like gambling mindset, like you mentioned.
Yeah. So I'm just curious, for especially right now in these interesting times of Ukraine and Russia in the stock market, how would you advise your clients or anyone just listening in to invest in this extremely volatile market right now?
Yeah, exactly. That's a good point. That's definitely a hot topic right now. It's something that should be considered very well. Like, and I think like from the top of it, like, yes, a war in Europe could affect Americans financially here. That is a possibility. We see it already with gas and inflation and things like that. And I think to advise like recommendations, like, it goes back to the whole objective. Like, what do you want to do? Like we have a financial analysis with all our clients, right? We understand their financial situation. We know where they want to go. And then from there, we would identify like their goals. So like if you want to be in the market for the next 20 or 30 years, that's one option. The other option is, what if we can grow your money still predictably outside of the stock market and outside of the control of what could happen around the world in places that we have absolutely no control over, right? Like, that's the problem, because it's like, what if you are very good with money, you are very good with investing, you are very good with numbers, but something, across the Atlantic Ocean happens and it's going to affect you financially? It's like not fair for you. You know what I mean? So like, what if there's a way where you could still grow your money and still grow your money and still not be affected by these external economic conditions. We actually just did an episode today on my podcast, Thinking Like a Bank, episode 51. So check that out. It talks about this. It talks about how to grow money, even when there's chaos and in a way kind of outside of the hands of other people.
So I'm just curious. It seems like you would be thinking like this too. Have you recommended people to invest in art?
In art?
Yes.
So good question. And are you also including like NFTs in there too when you say art?
I don't consider NFTs much more than a Ponzi scheme, but
okay, good. Somebody else is on my side. Yeah. So art, I know nothing about. Just full disclosure, I know nothing about it, about how to invest in it, how to grow it. So talk to somebody who does. You can talk to me and I can look through my referrals and see if I can find somebody trusted that knows about investing in art, but I don't. It's definitely outside of my scope of expertise. But yeah, definitely talk. So that's another thing too I wanted to mention on your show is that one of the ways, and I deal with a lot of high net worth individuals, right? So I see a lot of their habits and the things that they do and the way they think. And a lot of it comes down to their support system, right? Like who's supporting them, their coaches, their business coaches, life coaches, their accountants, their lawyers, their financial planners. They take their advice seriously. And it's almost like they almost in a way like lean on them for that support. So I guess if there's one thing you want to take away from this podcast is make sure you have like a support system who's actually like supporting you and giving you insights on certain things. Because you might see, it's completely like for me to come up with a business idea right now in my head and think, okay, I'm going to do these steps and it's going to be $1 trillion idea, which a lot of entrepreneurs do that. A lot of visionaries do that. They have these business ideas in their head. But then the second you verbally express the business idea, sometimes as you're expressing it, you're like, oh, wait a minute, this is actually a terrible idea. You want that. And that's good that you've thought of the idea, you've expressed it, you've crossed it off your list, and now you go into the next idea. I think that, when we look at like Apple and Google and all these large companies, I think that the product that actually hits the market and comes out, that is probably the 1,000th project they've worked on. That's probably the 100th thing they've worked on. It's not the first thing they worked on. It just made it through all those steps. So have a support system, work with people who can screen your ideas and give you feedback to not just say, yes, do this or no, do that. You're ultimately making that decision, but you have feedback from other people around you who have a vested interest in your success.
Oh, 100%. I've just learned that through, especially doing the show and talking to great coaches and guys like you. So I actually have my own like business coach and strategist. Yeah. He mainly just does it to give back to the community. It's like $30 a month for a weekly group call.
Yeah.
He's like, you're literally just paying for my electricity, my weird experiments, and my overarching bill. He's like, I only make like $3,000 off this a month.
Yeah.
But that's one of them. He says, he's like, if you know another coach, he's like, they're not going to be as cheap as me, but they're willing to work with you. He's like, it's valuable. Take it, kind of thing.
Yeah, exactly. I've started, I started my business. I failed a couple of times until it actually became profitable. And it was entirely because of coaching and mentoring. Like I wouldn't be able to, just the things that I've learned. And again, it's not so much of here, do this idea. It's more of you tell me, what do you think is good? What is bad? And then all of a sudden you start thinking like this on your own. You start to kind of analyze things properly. You sharpen your thinking skills because you've practiced in that way. You've practiced elaborating and expressing your opinions and your thoughts to the people. They've listened, and then it creates a support system for you. So go out and talk to coaches. Talk to we provide clients with free financial coaching. You can talk to us. Look, there's a lot of ways to hire coaches almost for free or pro bono where they only get paid after you get the results. So I definitely recommend that if you're in the middle of a business, you're struggling, or you want to start a business, or wherever you're at, you want to invest, talk to somebody who can help you with that.
Well, 100%. Yeah. And it's one of those, like, to tie back to the artwork question. My coach he's trying to do like a whole crypto group. Yeah. And that's where he's like, oh yeah, just $1,000 for the year. And I told him, like, this better not be you pay me $1,000 and I just say, buy an NFT and a ton of Ethereum and you're good to go, man.
Yeah.
And that's exactly what it turned out to be.
Oh, wow.
But I made a deal with him on the side. I said, okay, I don't have the cash right now, but how about if you actually can deliver me results? Because he has a yacht and he's all about fishing and getting money while he's fishing. I said, if you can give me the 40X you claim you got on your last year, I'll buy you a tank of gas for your boat. Because if you can afford the extra $1,000, $2,000-$3,000 to fill your boat is nothing for me then.
Yeah, exactly. It's a good point.
And that's where he's like, deal. He's like, actually, not many thought of doing that. I'm like, I was raised by an Armenian master of martial arts kind of thing. I know how to sell. You want shiny monkey, an extra $20. But the art thing, that was one me and him were talking about. Because I said, everyone's like, oh, NFT is a new art. I'm like, well, no, there's masterwork.io. I'm invested in 3 paintings right now. I just took one stimulus check and threw at it. But
Yeah.
I said, but yeah, I technically own this. I forgot the one. It's like 2 snakes yelling at each other, then a pumpkin, and then something else. I said, I don't even know the art or what it says. It just says it's going to annually appreciate 25% a year. That's all I need. I don't need to understand the technicals of the art. It says 25% a year. I'm good with that. Until I'm like, and everyone's like, but NFTs. I'm like, again, like my art, they say it's guaranteed pretty much like this rough percentage.
Mm-hmm.
Tomorrow the NFT could be worthless.
Exactly. Yeah. I still don't understand. I've been in financial services for like 7 years and I still don't really understand NFTs. I kind of have a very basic idea. You're buying like digital art and then people are like backing it up. Like a celebrity will buy it and then all of a sudden it like quadruples in value. And then some other celebrity will buy it from that celebrity and it'll go up even like more in value. But really, like, what's the value of it? It's just who owns it. Like,
yeah, it's all about, it's the hype and the story. There's nothing else.
Yeah, exactly. Yeah.
Yeah. That's like the same with crypto. Like it's going to stay whether we like it or not, but I don't think it's going to, like, Bitcoin's going to be the thing that dethrones the dollar, and IRS will only accept crypto kind of thing. I'm like, I don't think that's going to happen. It's the OG. It's like gold kind of thing, even though it's very energy inefficient, but it's not going anywhere anytime soon. But I'm like, a digital dollar though, I could see that, essentially like a Google Pay version of crypto. I could see that happening.
Yeah, I think there are some places you can actually do that right now. Like you could buy things probably with crypto digitally. I don't know. Yeah, I don't know. I have some Bitcoin, but I don't know exactly of like the technical things. But you're right. I think we're going to get to that point where it's just like you just buy things on Bitcoin.
I think so too. And there's like in that group, I was in the chat saying, okay, well, you want to do this, and like, oh, you must be like a crypto enthusiast. I'm like, I'm anti-crypto actually.
Yeah. It's
like those atheists that point out every flaw in your argument. I'm like the one saying this is a very bad idea and why.
Yeah, exactly. There's some things that with crypto, like they say that the government can't get involved with it. No other corporation can get involved with it. It's completely neutral. I don't necessarily believe that.
This war has proven otherwise already.
Yeah, exactly. There are ways that the government could interfere with, especially Bitcoin. They could, you know what I mean? They could regulate it. They've regulated like centralized parties, right? Like Coinbase, it's going to Coinbase and buying Bitcoin is the same thing as going and buying stocks through another platform, right? It's regulated. You get a 1099 form at the end of the year if there are gains, short-term gains, long-term gains. So like, the government is powerful enough throughout, the world. Each government could do certain things to restrict and impose sanctions and laws and regulations on money. That's the most important thing for a government, is to control its money.
Oh, 100%. I learned the hard way. When the war first started, it was just, I'm very contrarian by nature. So they're like, oh, this is bad, Russia, whatever. So I immediately hopped on my retirement, my Roth IRA, and bought an option on whatever the Russian I think it's RSX. I bought out in like January 2024. And then suddenly, like 2 days later, TD Ameritrade's like, yeah, so Russia says you can't trade that anymore. So it's yours, it's liquid, but you can't sell it. And I'm like,
oh, wow.
I'm like, well, at least I bought the 2024. Hopefully it works out by then. It'll be a very expensive experiment to find out. But yeah, that's one of those. I was thinking, I'm like, oh, like America's saying no, you can't buy stuff, and that's where I asked the rep, and he's like, oh no, Russia said no one other than Russians can buy this, and I'm like, well, that sucks. Fine, okay, whatever. Glad I got in early. So I want to say, do you have a strategy involving options like covered calls or buying long dated S&P 500s?
I wish, as you're talking, I'm sitting here thinking like maybe I should get more into this. Like maybe I should get into more of these things, these intricate, like sophisticated tools. Full disclosure, I don't know that much about options and and calls and things like that. I have a very, very basic idea of it. Like you could either profit from the gain of a stock or even from the loss of a stock, right?
Yes. So
it's almost like an insurance policy on a stock.
It's 100% an insurance policy. So you buy a call thinking it's going long, or you buy a put thinking it's going to be put down.
Oh, okay. That makes sense. Okay. And that's what happened, right? With like, what's it called? AMC?
Yeah. Everyone was buying long calls on AMC, and then it suddenly went crashing down.
Okay. And a lot of that had to do with a Reddit group, right? Or multiple Reddit groups?
Yeah, the Wall Street bets.
Okay. Yeah. So yeah, I kind of understood what that meant is that as it went up in value, people who were in it for like long, like wanting to go up, made money. And then hedge funds, which typically short, right? They typically short them. They wanted them to go,
Yeah. So what happened is the guy who, for the Wall Street bets, the guy who did it worked for a money like management firm.
Mm-hmm.
And the funny thing is, like, a hedge fund manager figured out that his username in Reddit was Roaring Kitty. So he figured out Roaring Kitty was his guy. So he was whispering in his ear, like, "Oh, I think this is going to go up," kind of thing, knowing he'd say it on Reddit.
Oh, wow.
So, and it's one of those, one of the guys, because they know I'm good at charts, I scrolled back. So they started talking in December about AMC. In October, I noticed a huge spike of buying activity, but the price didn't move. And I was like, that's a whale getting in. And for some reason, the pond didn't move. And that's where when I pointed out and showed everyone, I'm like, this is why I don't trust things on the internet.
Wow.
I said, so you think like you're sticking it to the hedge fund managers? No, they got the final FU in this.
Yeah, exactly. Wow. Do you think that something like that could happen again?
Oh, it's still going on. That was just the biggest one we all know. That's just how this whole market works is big whales come in before everyone else. They hype it up and then they sell and get out before everyone else notices. You just got to know.
Yeah. It sounds familiar. It sounds like crypto, like a lot of crypto stuff.
It is. That's why a lot of hedge funds are just buying random coins because they know one of them is going to go up and all they got to do is sell one of them and they'll make all their losses back.
Wow. Okay. We got to start a hedge fund.
Seriously. Oh, let's talk after. But it's crazy the amount of stuff that, like, I tried going on dating apps during the pandemic. I realized that was a terrible idea now, but it was one of them because they figured out it was good with money. And that's what they're like, so what do you think about this? Do you think this one's the next whatever? And I'm like, no, it's a really bad idea. If everyone's talking about it is when you should be selling it.
Yeah, you're right. Exactly. If there's this hype going on, right, where everybody's going to buy into it, everybody's saying you should buy into it, it's already too late at that point. Once the hype is out and everybody's talking about it, exactly. It's too late. You're already late. And
like my martial arts instructor, he's all worried, like, oh, inflation, the government, bond yields, this and that. Like, Biden's trying to crash the economy. I'm like, okay, Biden isn't single-handedly trying to crash the economy. Let me put it that way.
Yeah.
But I said, because he said, oh, oil prices only go up. And I said, because you just said that, guess what's happening to oil? And he's like, it's going up. It's going down, isn't it? I'm like, yes, it is.
Wow.
I think that's where he's like, prove it. So I pulled out my phone and I showed him, like, look, it just dropped $10 in our conversation alone. And he's like, so that's your whole contrarian thing really does work. I'm like, yeah. I mean, I'm not going to go around boasting because then I have to just stop boasting because I'm contrarian.
Mm-hmm.
So for you, what else? Let's say, off all that, let's say someone's eyeballs deep in debt. I know actually a few people, I'm thinking of them.
Yeah.
Like 20K, but they're on a minimum wage. How would you help them structure a plan to get out of that?
Yeah, absolutely. Okay. I'm glad you asked. So we do this all the time and we have a lot of proven success with this. So what we do is first step is KYN, know your numbers. Okay. So what that means is like know exactly how much. So I have something called like a personal financial tracker, and I give this away for free to people. So it's like line 1, for example, today's date, and then it'll have like if you have a checking account, savings account, like a 401k, you put in the account balances for each one of that day as of that day, and then you have another column, income earned. So it's like how much you earned, or it could be like inflow, like if you raised money or you borrowed money, like how much positive money came into your account that day, and the description of it. And then more towards the right is how much you have in debt. So like credit card ending in 1234 is 5,000. Credit card ending in 5555 is 8,000, and all until you come up with, like, for example, in your example, $20,000. And then now what you do is you look at it, you have a clear idea of what to pay off first and what you need to improve on. So if you're self-employed, you can say, all right, you know what, if I make a little bit more money here, I could pay off this credit card. It gives you a visual. It's happened with me. Like when I started my first business, I had about $40,000 in credit card debt. I had to, because I couldn't get a business loan. I was a brand new business. I wasn't going to qualify for a loan anywhere. I couldn't go to investors and raise capital. I didn't have a proven track record or a strong enough business idea that was going to get me in front of investors. So I really didn't have any other options. I didn't have that much in savings. So I had to fall back on credit cards, which is bad. It's a form of bad debt, of course. But at the same time, in my opinion, it was better than not starting the business at all. Right. That's kind of my thinking. So yeah, so it's called the personal financial tracker, and that helps you a lot. And then the second thing is you want to identify your objectives. So one thing that people do is they say, all right, do you pay off I think pay off the smallest debt first, like chop it off. Like if you have a debt that's $100 and you have another debt that's $30,000, chop that $100 off and then literally exit out on the Excel sheet. So like get rid of that. And then what happens is psychologically, you start building this momentum. Like, oh, I like doing that. I like chopping off that whole debt and then just like erasing that credit card. That helps. Now, another thing too that helps too is you have to be careful with this. You have to be cautious with this. But let's just say you have a credit card with like a bank, right? And it's 18% interest. You can call the bank and say, hey, the pandemic, I'm a minimum wage or I lost my job. And then they might be able to renegotiate the interest from like 18% down to like 1 or 2%. And then that'll save you a lot of money on the monthly payment. So you pay off the debt quicker. There's no guarantee behind it. Right. Also, there's no system behind it. It's usually on a one-time, like each deal is different. So like the person you're speaking to has to evaluate the deal. They might have to get a supervisor involved, but it helps. I've seen better success with bigger banks rather than smaller banks, because bigger banks, they obviously have more money, so they could take on more of those hits. But the reason why, now you're probably listening, like, why would the bank go from 18% interest to 2% interest? Why would they accept less money? And the answer to that is because there's a less of a chance that you will default on the loan.
And they get nothing.
And they get nothing, exactly. So they would rather get something consistent. The most important thing for banks is the income coming in the door for them. That's the most important thing. If you have that going, as long as you can have that happening for the bank, you're on their good side. You won't affect your credit, things like that. So reach out to the bank and then figure that out. And also do this with the guidance of a professional helping you out.
Oh, 100%. That's one of them. So my mother actually works at a bank, and I knew about that too. Yeah. And that's one of them I've always considered. Well, I was bad in debt, but she helped me out of it. But that's one of them. She said, like, you can technically call them. She's like, it's a per diem, like per day, like per situation thing. Yes, but she's like, but yet, like you said, they'd rather go from 18 to like 6%. Yeah. Because at least they know you'll pay it off. They're not going to make as much. Yeah. But it's better than you saying, sorry, I'm going to go bankrupt, and then they lose everything.
Yes.
She's like, they'd rather do that, hands down. But then she's like, but they don't market that. They don't want you to know about this either.
Yeah, exactly. Yeah, exactly. Yep. Because if you did market it, then, they would probably just stop giving it to everybody. And then like, all right, if you want to file for bankruptcy, go ahead and do it. We have you know what I mean? So yeah, it's definitely something they don't want to market. And again, it's not guaranteed. So somebody, might not get away with it, but they might grant it for them and then not for you. So try, I guess, is the biggest thing, is try.
Yeah. The worst you can get is a no, but you're not going to be like, they're not going to slam the door in your face.
Yeah. And then it brings me to another point, is sometimes, and the topic is that sometimes banks will say, all right, we can't help you, but this credit agency could. And then they refer you out to them. And then what happens is that this agency, again, be careful with them, because what
those can get fishy real quick.
Yeah. They'll say, all right, stop paying the bank, intentionally default on the credit cards, pay us up until we can build out an account of like $6,000 or whatever, $1,000, like a quarter of it. Then we would negotiate with the bank. We would call the bank and say, all right, do you want to take 50% or 25% of the debt, or we file bankruptcy? And then they'll say, okay, whatever. But then when you do that, you end up getting all these like negative inquiries on your credit. First of all, because you defaulted on them. Second, because you closed the accounts. And then third, because you negotiated an amount, you settled the debts. It could be almost in a way as bad as bankruptcy when you do all three of those things.
Yeah. No, that's a big one for me. Like, I haven't filed bankruptcy, thankfully, but
Yeah.
it's one of those for the longest time. My credit score never went up, but it never went down, kind of thing.
Yeah.
Actually, I think it went down one time because a shady credit card plays. I was unemployed for 6 months, so I was just literally going to doors and having them slam it in my face, like, "No, we can't hire you."
Yeah.
But yeah, I went to this one place, so they ran my credit, and they claimed it wasn't going to affect it. They're just going to run it, kind of thing, just to see what they would get. And I'm like, oh, okay, that itself is not going to hurt me. Well, I guess they intentionally ran it like I was a buyer, like 15 to 25 times.
Oh, wow.
And so it dropped me like 50 points. I made it back already, but it was just one of those. I'm like, yeah, I'm going to tell them if they have to run it like that. Nope, we're good. I'll go somewhere else.
Yeah. Wow. Yeah, there's so many. That's a whole nother subject in itself, just a credit part. Yeah. But yeah, like, there's a lot you could do. I don't, in my opinion, I don't think $20,000 is that crazy. Like if you make minimum wage, what is that? $20K a year or, plus or minus?
I think now, at least here in California, it's $15 an hour.
Yeah.
And that's $30K a year. So yeah, you could put, if you scrounge and scrap, and you could make like 8,000 on the side.
Exactly. And then you can also reposition the debt. So that means that if I have, for example, 4 credit cards with $20,000 total with an average interest rate of like 16%, you could probably qualify if you've been making the payments and you have income and things like that. You could probably qualify to consolidate with somewhere else. You get a personal loan from, a lot of these apps, the peer-to-peer lending. I've heard mixed reviews about them, by the way. But you could do like $20,000 from that, and then you pay off all of them, and then at like 7 or 8% interest, and then you just make monthly payments on that. So, as long as you're making the payments, there's a lot of creative things you could do. And also, I want to emphasize on this, there's a lot that professionals can do. You know what I mean? There's a lot, like one of my friends, so we're bank on yourself professionals. And what he does is he's a bank on yourself professional as well as like a credit specialist, which I think it goes hand in hand. Like you have the investment stuff, and then you can also do the credit stuff. So like he has a program where if you, for example, paid his agency like $50 a month or whatever to do the credit reporting stuff, it would show up as a positive sign every time you made that $50 payment. And then there's an app called Self. I used it and it actually ended up working. So it's like a savings account you open up, you do like $20 a month. And every time the $20 a month goes into the savings account you started, automatically, it shows up as like a payment that you're making. And that helps out with your credit. So there's a lot of things you could do, as long as you have people working with you, people in your money team, your professional team with you, there's a lot you could do to get out of debt and to even get on the positive side and beyond.
100%. Yeah, that's actually a very similar strategy for me. How I built mine up so quickly is I have a credit card and I just have a money market account. I know I'm losing money, but it's just one of those like more overdrafts.
Yeah.
But whatever the current amount in my money market, the extra on top of the whatever $1,000 I have to have minimum, that's all I can let my credit card debt get to. So like it was at one point $300, but I had to make a payment for something. Mm-hmm. So the next cycle, when I got money, I immediately paid down my credit card to whatever it was in the thing. And that's where I've noticed, just like I said, leaps and bounds, suddenly like everything's going like to the moon.
Yes. Mm-hmm.
So it's just, there's legal and ethical workarounds. Yes. You just got to know the system.
And you really do. Like just making enough money or having money is not enough really to survive, to have good credit, to make money, to get to your financial goals. You really need the additional ethical and legal strategies and tips to kind of to pivot, or else, or if you don't have a plan for your money, somebody else will.
Oh yeah. They will. So I'm just curious for you, because you seem like you would think like this too. Would you recommend people, if they get to the point, they have a good cash flow, they don't want to be active, they start an LLC and invest in like real estate in it, and just kind of like they let a property manager handle all that stuff. Is that something you would recommend to them, or like putting their spare money in an LLC for whatever investments?
Yeah. So it depends on how much we're talking about, but
let's say hypothetically they have an extra 100K sitting around for fun.
Oh yeah. 100K. If you're a non-accredited investor, I would probably do like 50,000 of that in a real estate syndication. Mm-hmm. And then I would put the other 50,000, I'll probably put 25,000 in reserves, just backup. Mm-hmm. And then the other 25,000, I would put it into one of the solutions we have, Bank on Yourself. in the book Thinking Like a Bank that we wrote, you could learn more about that, but that's what I would kind of do. And again, this is just a high super fast financial plan. There's more in depth, but
Right.
that's kind of how I would do. I would do, like, one thing to consider is have reserves in place just in case like things don't go accordingly. And then also think about that. Think about, what if things don't go accordingly? What would you do? Do you have enough to lose that? And then another thing too I would do is, I learned this kind of recently, is have everything in writing, even if it's just you, even if it's just like between you and yourself, have everything in writing, because when you write things out and then you say, all right, what's the plan? What's the anticipated investment or cost? What's the return? When am I going to get it? What's the percentage? What's the ratio? What's the average compared to other people? You start doing all these additional steps in between it. You end up learning more, and it might either deter you from doing, like, you know what, this is actually not a good idea, or it might say, all right, do it, but do it in this way. So like you end up learning more about it. Because I remember, like, when I was doing my MBA, I was taking this like 500 level finance course. And then the professor was saying, when he graduated college, he was a financial analyst. He worked at this company. And then this is my professor talking. He said he was analyzing these numbers, and his job was just to create 5-year projections for the company as far as income, profitability, all these things. And then he said that at the end of year, so that he would do the 5-year plan, they would implement it. Year 1 was about 80% accurate. Year 2 was about 50% accurate. And then by the time year 3 came, they had to do a new 5-year report, a new 5-year analysis. And he would keep doing that all the time. And then I rose my hand right away, and he's like, let me guess, you're going to ask why we're doing 5-year plans if we think we're going to have to revise them every 2.5 to 3 years. And I said, yes. He's like, it's because we learn more about the company, the economy, the market, our clients, customers, all of that, our investors, as we're going through this analysis. We're finding out more data and more information. It's adding in all those extra steps. So then at the same time, you want to think like that. You want to think like a multi-billion-dollar corporation, where like you have this analysis, you're going through this, not overthinking, not like paralyzing yourself with thoughts, but all at the same time, you're adding in additional steps before you invest in something or implement something. So that way, like, you can better screen it and better figure out if it's going to be a good decision or not, because we won't know, right? We don't know the future, but you could implement certain mathematical things in between you and logical sequences to figure out if it's going to be a good fit or not.
Oh, 100%. Yeah, that's for me, my biggest one. I've come to realize I do more like every year and a half.
Yeah.
I think it's 6 quarters. I do a full like reset and just see what's going on. It's kind of like the guy is like, the first year is pretty accurate.
Yeah.
Second year, it kind of worked, but if you fudge your like squint just right. That's for me. I just like every year and a half, I just be like, okay, this is where I'm at. This is how much I've grown. What can I do better? Kind of thing. So we're getting close to the closing mark. I got some going out questions for you.
Yeah.
So other than work, what have you been doing to keep yourself busy during these COVID lockdown times? They're soon ending, apparently.
Working out a lot. I love working out. It just keeps me like mentally clear, and reading a lot. I read like 3 or 4 books at the same time. I read like 10 pages of each book, like a day. So that keeps me really, and then plus my wife and I, we have a son now, so that he's keeping us busy. Yeah.
Cool. So just learning and working out. Awesome.
Yeah.
So what are some tips, tricks, or advice someone that's inspired to be like you, you'd give them to start down that path?
Yeah. So work with a professional, identify your goals, get very comfortable with you doing homework for yourself, right? Like, don't just do, research for your job or your company or your school, but get very comfortable with like your intellectual side, like take notes, you know what I mean? Do checklists, write out your goals, revisit them, type them on a Google sheet or Google, document, go back to it, revise it, like create these as if you're working at a company or as if you had, you were taking a college course. Like kind of do that with yourself. You know what I mean? Keep those things, document like your life as you go along.
100%. Then where can everyone reach you at?
Yeah. So everybody can reach me at thinkinglikeabank.com. It's the name of our podcast. You could actually download the book, the ebook for free, Thinking Like a Bank. There's a Calendly link, so you can just schedule an appointment with me if you'd like a free 15-minute call. If you're looking for kind of to strategize about what to do with money and how to think differently about it, and kind of just some different situations. If you have an open mind and you're looking for different perspectives, go to thinkinglikeabank.com and schedule an appointment with me.
100%. Yeah, the open mind is very important.
Yeah.
It's been an absolute honor and a pleasure to have you on.
Thanks, Josh.
Well, congratulations. You made it to the end. You are an awesome person. Not many make it here. So being the awesome person that you are, can you do me one more awesome favor? Can you rate and review this on whatever podcast services you're using? If you do it on Apple and you leave an actual written review, I have a thing on my website. I will take your written review and post it for all to see. Congratulations, you're permanently sealed on my site. Otherwise, I am trying to do YouTube more and live streaming. I will try to put as many of the YouTube links in the description of the show as I can. So give your boy some extra help over on YouTube. Watch my videos. I just mute it and change the channel, change the window or something. But yeah, that's it. Thank you for being awesome, and see you next time.